Hi guys, welcome back to my channel. Today we're going to be talking a little bit more about investing and my plan for 2021 and what I've learned in the last year or so of investing, and hopefully just give you a little bit more of an insight into why I invest. So if you're new to my channel, I've been on a huge money saving journey over the last few years, and now it's time to make my money work for me. So hopefully if you are also trying to learn a few things, this will give you some insight into why I do it and how I do it. And as time goes on, I am planning on sharing my investment portfolio. What I want to caveat this video with immediately is I'm not a financial advisor. This is not advice, this is just what I do, and do your own research because it's really, really important before you invest your money, because you've got to be sure that you know what you're doing and you're not just going off and doing exactly what I'm doing. So make sure you're doing those things. So as I said, I have been saving my money for a long, long time now, and for me, I know that I want to make my money work for me. So I will be talking later on in this video about the ways in which that's going to happen and how I'm going to make that happen, and also the things that I've learned from investing, because it was all brand new to me. You might have seen my video back a few months ago about how much of my savings I've invested, and if you haven't watched it, I'll link it in the description bar for you. But I have learned so much since then, and I've also invested so much since then. I'm definitely learning on the job, as you say, and also just building my education from left, right and centre, reading books, watching videos, listening to podcasts, all of the things just to educate myself. So as I said, you need to do your research as well. Your capital is at risk, and it is not, you know, a guaranteed result. So my plan for 2021 is I definitely want to be more socially, ethically, sustainably aware of my investments. So when I first started, I didn't know what I was doing, and I went straight in, and my first investment was for Wisdom Tree crude oil. In fact, I've still got that share. It's up at the moment, I think about 40%. I bought it in March, and obviously if you had shares before March when the stock market basically crashed, then you will have seen a huge negative there. I started in March, so all of my numbers are pretty much up. There's a few that are down. I need to work it out, but I think overall I'm about 12% up, and this does fluctuate all the time. So would I buy crude oil now? I don't think I would, but would I buy a company that might actually have not such ethical development processes without my knowledge? Then yes, I probably would, because I don't have enough information about it. But there's a really big steer towards funds now that are made of these much more ethical companies, and for me that's something I definitely want to involve myself a lot more in and be much more aware of. So I have got, I think, maybe about 20 shares within my trading 212 portfolio, and as I've said before, there is a link in the description bar where you will get a free share worth up to £100, and I would do as well. And people are getting shares in like Uber, which I think is about £40, Unilever, which is a good one, I think that's about £45, AMD, again a higher value one. But then there's lots of, you know, lower value ones. All you would need to do is set up an account and deposit £1, and then sometimes the link that's in my description doesn't work, so there's a code there as well you can use, and it will give us both a free share. But I don't want to kind of like tell you that and then dump and run sort of thing, which is why I'm going to start building on these videos to hopefully give you a bit more of an idea of what to do and how to do it. Because like I say, you know, your money is at risk. With that £1 share, you can literally deposit it and then take your free share and run, or you can leave it in there and not do anything again, or you can keep building on it, which is what I did when I was first introduced by a friend of mine. So it's just something you need to be really aware of, that you are, you know, your money, you could lose your money. If it's a free share, it doesn't matter, it's a free share anyway. You can make some money, that's great. But for me, I'm just so aware that I want to build on my money, and I'll get more into that in a minute. So investing for me isn't just about money in stocks and shares, it's about investing in myself. I want to do more courses this year. I want to do more educating of myself. Like I said, let me know, drop me a comment in the description if you know of any good books that you've read recently that are really good for learning about investing, and also more investing in my business. So I can control that. I can't control the stock market. So for me, you know, investing in a team that can help me putting Pinterest pins together for me, because then they get, you know, people can find them a lot more easily, or, you know, building me graphics to put within my videos. There are things that I'm going to start investing in because in the long run is going to actually help with my business, because my mission is really just to help you guys save as much money as you can, as well as grow your wealth as well. So, you know, if I can invest in my business, I can get a bit more back from that. It's a bit more guaranteed. The results are a bit more guaranteed than investing in the stock market. So another plan for 2021. So on to some things that I have learned in my first year of investing. And like I said, I actually started my journey in March when the stock markets had crashed. Now, the last time this happened was the 2008 housing crash, and then the late 1990s 2000 dot-com bubble. So when these things crash, obviously if you've got your money in your shares, you're going to lose a lot of money. But the thing that I've really learned is just to hold fast. Don't pull your money out and keep it in there, because it will recover. And obviously now stocks are going crazy because they've risen again. So for me, I did invest in a really good time, which is why most of my accounts are up. I looked earlier, I don't tend to look at this. So I have my Vanguard account, which is my stocks and shares ISA, which I literally have an auto invest in there every month, and I don't look at it. So I had to look at it just for the point of this video, and it's up 24.3%. Now, what I will say in what I've learnt, and this is a huge one, that money won't in itself grow itself. There's only so much you can do with money when you put it into your bank. You know, at the moment, I think my savings account is at 0.05% interest. And did you hear I just made 24% on my Vanguard? I mean, to me, it's making my money work for me, but there are no guarantees. So my bank will always give me that 0.05. Well, actually it won't, because it gave me like 0.1 last month or last year, but now it's on 0.05. There's no certainty there, but at least I won't lose my money. But for me, I think just learning the fact that money in itself won't gain velocity, it won't gain value, because there's not enough interest out there. So making my money work for me is the way that I'm going to try and expand my wealth and grow my wealth. You can only save so much money, and that's why this part of my journey is now kind of like pivoting off in this direction of, okay, I'm doing really well at saving and that money's safe. Now let's make our money work for itself and actually grow it, because otherwise you can't build wealth from, you know, unless you invest in property and then you do really well from that. Or there's other ways, but your money in the bank is not going to grow like investing would. Another thing that I have learned from my first year of investing is that consistency is key. You have to be consistent, and I have an auto direct debit now into my Vanguard account every single month, where I don't even know that money's there. It goes in and I just don't look at it, because this is for my future. This is for, you know, when we can retire, or when the children need to go to university, or, you know, it's years, decades down the line, so I can afford to ride that storm of those bumps and ups and downs and crashes and builds up again, because I know that I don't need that money in the, you know, future and the near future. Another thing that I've learned is that it's about the time in the market, not the time that you go into the market. And that is something that people talk about a lot when we talk about investing. So yes, I came in at a really good time in March, but my money, even if I came in like last March, my money over time, with the magic that is compounding, my friends, look up compound interest. In fact, let's do it now, because this stuff is magic. It's literally magic. And why they don't teach this in schools, you can just, you know, you just think about that one. Compound interest is the addition of interest to the principal sum of loan or deposit, or in other words, interest on interest. It is a result of reinvesting interest rather than paying it out, so the interest in the next period is then earned on the principal sum plus the previously accumulated interest. So basically, your money is building on itself every month, every year, and then not only your money, but the interest that you've earned is then also building interest. Does that make sense? So it just keeps going and going and going and building up, and that is compounding, and that is why the time in the market is so important. So for me, I wish I'd done this sooner, but that's by the by. You know, people write to me all the time, I wish I learned to save money sooner, I wish I didn't waste money sooner. Yeah, I get that, and I'm the same, but we need to move on and just that's happened, it's in the past, let's go with the future. So compound interest is so important, and the time that you're in the market is also so important. The next thing that I've learned throughout my very short-lived so far investing journey is to make a plan, and it can just be the simplest of plans. But for me, my plan is I will invest this much money every single month into one account and then into my trading 212 account, and I am actually looking at maybe setting up another platform because I think there's quite a few shares that aren't available on trading that I'd like to get into, so watch this space. I'll probably be setting up a new trading account very soon. But I just wanted to find my feet with this, and trading is just so easy because it is like an auto investor. It does it all for you, it works it all out. You don't need to be any kind of a mathematician to work it out. And I literally will say, okay, I've got £100 to spare this month, and instead of just leaving it in my bank or putting it into my savings account, I'm going to invest that money, because in the long run, with compound interest and with the money that I can make through investments, it's going to actually build so much more wealth than putting in my 0.05 savings account. I think I've mentioned this, but one major thing that I've learned from investing this year is that the markets are very, very volatile. I'm pretty sure I've said that, but just to recap, they're very volatile. You could lose all your money or you could gain loads of money. Okay, another really important thing that I've learned, and this is kind of like my money mistakes video, because I feel like I'm learning these things and I can tell you guys to help you if you're new to it as well. And that is that you cannot put money in your investments if you need to access it in the next like 3 years, I would say. So for us, this money is not our house deposit, because that is way too risky. I would never do that if I was saving for something like that. That money is safely tucked away. This money is the money that I know I'm not going to need to access and that I can keep in there and keep it building up. So for example, if your house deposit was in your trading 212 account or whatever account you had, and you were going to buy a house in the April with the new tax year, you're all ready, and then March 2020 came along, and then suddenly you're down 40%. But you need your money, so then you have to take it out. So you've lost 40%. Whereas if you didn't need to and you could ride that storm and let it build back up again, then you know you're not going to lose all your money. So it's really important, make sure you don't need access to that money anytime soon. Another thing that is really important to know about investing before you start is that your emergency fund is way more important. Get that saved, get that locked in, and don't touch it. Your emergency fund is something that you will need if things go to beep like they did in the last year and need we remind ourselves, and they still are, I am very aware. So make sure you don't use your emergency fund, save that first and then work on your investments. That leads nicely onto my next tip, which is I think probably my biggest thing that I would ever recommend you learn about investing before you even start. Don't invest what you can't afford to lose, okay? Because I don't know if I mentioned this, but investing's volatile, guys, and it's almost like if you're just starting off, like a £10 here, a £5 here, £100 there, it's like fun money. You know, I know that it's a lot of money to some people, and I know that, but it's the money that maybe you're saving from not getting your nails done or saving from not going to the cinema once a week because they're shut. You can start investing that, but that money you would have spent anyway, so you're not relying on it. So only spend what you can afford to lose, because this, you could lose it all. And finally, you just got to mentally prepare for this. You know, it's a volatile game. I don't know why I've said that so many times, but I'm really trying to get that point across. It's something that you just shouldn't panic about and that you should do your research on. Like I said, it's really simple to use the trading platform. I'll leave my link in the description, but make sure you're happy with, you know, that you might lose your money. But the gains are there. Like I said, 24% on my other investments, and I think trading, let me just check really, really quickly for you. And my trading account is currently at 9% because I've got quite a few there that are bringing it down. So I've got... in fact, I might do a whole video on my investments and how much I've got and what they're doing. There's a lot of green on there. Etsy, 36% interest. Under Armour, which was free shares that I was given because someone shared my link or used my link, 65% growth. So I've spent £50 and I've got £20 back, and that's within a month or two. So yes, there's little things here and there, but overall I've earned £300 on these investments. So would I have earned that on that much money in the last 9 months in a bank? Absolutely not. So for me, it's the opportunity of how much it's going to go up. Anyway, I've got to go, guys. Thank you so much for watching. Let me know if you use my link in the comments and let me know what you get for it. I've just got a little person coming in now. Hey, Papa. Ugh. Hey, my gorgeous.
My cheeks are red.
Oh, they are red, yeah. Stu just took them out on his lunch break to have a little run around in the field to do some PE lesson.
Yeah.
And give me like 5 minutes to film these videos. So yeah, that's why these videos might be a little bit hectic and a little bit, yeah, just wild because got to fit it all in amongst homeschooling. But anyway, good luck to you if you're doing that as well. Thank you for watching and I'll see you so soon. Bye! Yeah. What are you going to do with that? No, it's got stuff in it. It's a bin. Okay, ready? 1, 2, 3, go.